Strive Inc. is currently trading at exactly 1.10 USD, down 0.022 or 1.96% on the day, a movement that might look like a standard fluctuation for a microcap stock on the surface, but actually signals a much more aggressive consolidation phase than most market participants realize. When you see a stock hovering just above the $1 mark, the expectation is often that you are looking at a distressed asset, a company fighting for compliance, or a lotto ticket with little fundamental substance. But the reality of Strive Inc., trading under the ticker ASST following its complex reverse merger activities, is that it represents one of the most audacious pivots in modern financial engineering. We are not looking at a dying social media server company anymore. We are looking at a firm that is attempting to operationalize a Bitcoin Treasury strategy similar to MicroStrategy, but doing so with the agility and extreme volatility of a small-cap equity. The 1.96% drop we are seeing today is not necessarily a sign of weakness, but rather a checking of the liquidity by market makers, a phenomenon where the price is allowed to drift lower to see if retail stop losses trigger, clearing the board before the next leg of institutional accumulation can occur. This creates a fascinating tension because while the general public looks at the chart and sees a penny stock potentially fading, those in the know see a company that has explicitly stated its intention to hoard Bitcoin on its balance sheet, effectively turning every share of stock into a leveraged call option on the future price of cryptocurrency. To understand the gravity of this price action, you have to look beyond the simple red number on your screen. A drop of nearly 2% on a stock priced at $1.10 is mere sense. Yet the volume accompanying this move tells a deeper story of hand-over-hand exchange between impatient retail traders and longer-term speculative funds. Unlike trading Tesla stock, where a 2% move moves billions in market cap and dominates headlines, or Apple stock, where such a drop would signal a major macroeconomic shift, a 2% drop in Strive Inc. is often just the spread, or the cost of doing business in a low-liquidity environment. When you place a trade for this stock, perhaps using interactive brokers trading execution to get the best fill, you might notice that the bid-ask spread is wider than what you would find on Nvidia stock. This spread friction often accounts for the intraday volatility we are seeing right now. The market is currently pricing in the execution risk of Strive's massive transition. They are moving from a legacy business model into the high-octane world of digital asset management, and the market is demanding a discount for that uncertainty. That is what you are seeing at $1.10. You are seeing the price of uncertainty. If the market were 100% convinced their Bitcoin Treasury strategy would work perfectly, the stock would likely be trading significantly higher. The fact that it is here gives you, the contrarian observer, a window into the skepticism that still hangs over the ticker. It is crucial to analyze the specific intraday dynamics we are witnessing. The stock opened, likely saw a brief push, and has since retraced to this $1.10 level. This suggests that while there is buying interest, there is also a steady stream of supply coming from legacy holders of the old asset entities company who are looking to exit now that the merger news has settled. This is a classic churn event. For those of you using Robinhood stock trading or checking the Robinhood app, you might see this ticker trending not because of earnings per se, but because of the sheer velocity of shares changing hands. It's a battleground. On one side, you have legacy investors cashing out. On the other, you have crypto-native investors buying in, viewing this as a cheaper, albeit riskier, alternative to the major crypto mining stocks. This is where online investment psychology gets interesting. The average investor using Schwab Intelligent Portfolios or a similar SoFi robo-advisor is never going to be exposed to this stock. Algorithms designed for safety and stability filter out companies with this profile of volatility. This means that the price action is driven almost entirely by active manual decision-making, humans hitting the buy or sell button, not passive flows. This makes the support level at $1 incredibly psychological. If it breaks $1, the risk of delisting warnings comes back into play, which acts as a magnet for short sellers. However, holding above $1.10, as it is doing now, despite the red day, shows a degree of resilience that the bears might be underestimating. Let's talk about the mechanics of how to invest online in a company like this versus a traditional blue chip. When you look at Fidelity Investments or your Fidelity brokerage account, you are often encouraged to look at PE ratios, cash flow, and dividends. If you apply those traditional metrics to Strive Inc. right now, the stock makes no sense. But that's the wrong lens. You have to view this through the lens of net asset value relative to Bitcoin holdings. The company is essentially raising capital, issuing shares or debt to buy Bitcoin. If the value of Bitcoin goes up, the book value of the company goes up. The stock price should, theoretically, track the Bitcoin price, but with a multiplier effect. This is why we see such sharp moves. Today's 1.96% decline might simply be a decoupling or a lag relative to the broader crypto market. Sometimes these small-cap proxies get tired after a rally and need to rest, even if the underlying asset, Bitcoin, is strong. This provides an opportunity for self-investing enthusiasts who watch these correlations closely. If you notice that Bitcoin is rallying, but Strive is down, that divergence is what traders call an arbitrage opportunity. You're betting that the stock will eventually play catch-up to the asset it holds. We need to look at the broader ecosystem of investment help and where Strive fits in. Most investing sites will categorize this as a technology or services stock, but that classification is becoming obsolete. It's a financial holding company. This shift is something that platforms like SoFi Invest and Robinhood crypto traders understand intuitively, perhaps better than the old guard. The expectation was that Strive would remain a niche player in the influencer marketing space. The reality is that they are leveraging the public markets to build a treasury. This is a high-risk, high-reward maneuver. If they can successfully raise capital through their preferred stock offerings, ticker SATA, and deploy that into Bitcoin without diluting shareholders to oblivion, the $1.10 price point could look historically low in retrospect. However, if the capital raise fails, or if the price of Bitcoin collapses, the leverage works in reverse, and the equity can get wiped out. That is the stake you are playing for. It is not a savings account. It's a venture capital bet that is liquid and trading on the Nasdaq. Comparison is a powerful tool for analysis. Think about the stability you get with Fidelity mutual funds or Fidelity ETFs. Those vehicles are designed to smooth out the bumps in the road. Strive Inc. is the opposite. It is designed to hit every bump and jump off it. It is more akin to the early days of Robinhood fractional shares trading, where users would pile into momentum names. The volume we are seeing today suggests that the retail army is watching this stock, but they are hesitant to commit full capital until they see a decisive break above resistance levels, likely around $1.15 or $1.20. Until then, we're stuck in this chop at $1.10. It's also worth noting the role of interactive brokers platform users here, often more sophisticated algorithmic traders. They are likely scalping this range, buying at $1.09 and selling at $1.11, creating a wall of liquidity that keeps the price contained. This range-bound action is frustrating for the moon boys who want a vertical line up, but it's actually healthy. It builds a base. It allows long-term believers to accumulate shares from the impatient hands without spiking the price too early. I want you to pause for a moment and engage with the reality of this setup. We are talking about a stock that is bridging the gap between traditional equity markets and the digital asset economy. It's a dangerous bridge, but a potentially lucrative one. Comment below how many shares of Strive Inc. you currently hold, or if you are waiting for a dip below $1 to start your position. I am genuinely curious to see where the sentiment lies. Are you aggressive here, or are you keeping your powder dry? Moving into the fundamental pivot, we have to discuss the Strive brand. This isn't just a random name change. By aligning with the Strive ethos, often associated with anti-ESG or pro-shareholder primacy movements in the asset management world, the company is tapping into a very specific cultural and financial zeitgeist. This is a differentiation strategy. While other companies try to be everything to everyone, Strive is carving out a niche that appeals to a specific type of investor who is tired of corporate bureaucracy and wants raw exposure to value accretion, specifically through Bitcoin.